Welcome to the Money Flow Show. We haven't done one of these in a while, so getting to sit down with Jason, who's also co-founder of moneyflows.com. We really wanted to highlight what's going on in the markets. I know there's a lot of volatility. Jason's actually got some really great insights we've been sharing with subscribers, and just anytime we get the microphone in front of us, I thought it would be really powerful to go ahead and talk about these markets and then really morph into when we think the lows could be here. And with that, Jason, why don't you kick us off? Tell us a little bit about this destruction under the surface of the market from the way that you're seeing things.
There's a lot happening, right? I think, something we've been discussing, Luke, for a while is we like to rely on seasonality, and we have sort of probabilities of what we can expect in any given month. And as it turns out, August and September are historically weak months of the year. In fact, September has been positive only 50% of the time since 1990. Yet on the flip side, November is the strongest month of the year, historically speaking. So again, we went back since 1990. We calculated all the monthly returns for all the indices, and we found that November is strong, positive 74% of the time since 1990. And the S&P rises about 2.45% during that time. Well, this month has been anything but that. Obviously, we had a lot of bumps, a lot of bruises, but there's always a silver lining. September and October were unseasonably strong. So I'm looking at this as like seasonal volatility just showed up a little late. The market got a cold. It's got a flu, and there's a lot of pressure in the markets. Now, that doesn't make anybody feel better when they see their equity portfolios dwindling.
I think it's so interesting that you talk about seasonality, because so often we rely on these historical patterns, almost like they're going to work like clockwork. But as you're saying, sometimes they can be delayed, right? And we just follow the data. So
yeah, absolutely. So check this out. This is the seasonality chart we're looking at. You can see I circled in November. That's what we should have expected, but it's been anything but. Right. So what we are seeing, though, is a deterioration in equities. And I'm going to go over here and hop over Money Flows. We have a portal. It's a web app. And we can see right here, the markets kind of went sideways starting late October. We had the peak of the rally right around Halloween, and then things started to fall. But this big money index, which is our proprietary money flows index, that money flows is so important, right? That's what everybody should be paying attention to. That's ultimately what drives market prices. And that's the premise of our whole being, right? But the amber line shows money flows. It's been flowing out. And that's disconcerting. Luke, you asked sort of what were the insights, and I see it as a big deleveraging. Okay, let's hop over here. I'm going to scroll down. There's a chart. We like to look at FINRA, is the Financial Industry Regulatory Authority. They monitor margin debt. What does that mean? If you trade on margin at Schwab or TD Ameritrade or anything like that, they can extend you credit. You can borrow money to trade on capital you don't have. They have to report that legally to the authorities and say how much debt and how much credit is being extended into the system. These red bars over here is going back all the way since 2020, the last 5 years. It are margin debt balances. So we can see over here, the latest entry for October's reading was about $1.18 billion.
Trillion, right? Is that billion?
Trillion. My apologies. Yes. $1.18 trillion of credit being extended to traders. Now, the blue line is the SPY. That's the S&P tracking ETF. And you can see how tightly correlated it is. When leverage gets big, markets go with it. When leverage falls off, markets fall off. And back over here was COVID. You could see how quickly things delevered. You could see over here in 2022, the tech crunch, leverage came down, the market came with it. And you can see over here, Liberation Day in April, people quickly dialed back. And it's not because that's voluntary, right? Luke, what happens if you're trading on leverage and the broker calls you up and says, we're reducing the leverage ratio? What happens?
You either got to sell some of your assets or you got to pony up more cash.
Yeah, you got to pony up more cash or sell some assets. And when everybody's levered to the hilt, imagine maxing out your credit card. There's no more room on the credit card. Right. There's no more cash guess what? You're forced to sell. And I think that is what's spilling over into the equity markets here. And a great place to look is that all this margin debt is reported to FINRA, but guess where it isn't reported? Cryptocurrency, right? You and I have been talking about it. We look at it. We don't really trade it that much, but we're always monitoring it. And what I found looking over here in the Money Flows portal, we can look at ETF flows. And this is a great place to see, hey, the green is inflows. On this particular day in August, there were 113 inflows, unusual money flows into ETFs. And we can see which ETFs those are. That's really cool. No real outflows to speak of until all of a sudden we get here in October 29th. I'm going to click that date. And we're going to look at what the outflows. I want to look at November 4th. Here we go. You can see there were 5 currency outflows. If we look at the next day over here, November 17th, you can see there were 9 currency outflows. What we started to see is these ETFs were all Bitcoin, Ethereum, more Bitcoin Trust. And I went ahead and I added up all of these days of outflows here leading up to this big zenith, which was last Thursday when markets were really ugly after NVIDIA's earnings, no less. All these outflows, 40% of them were currency. So I know that's a lot. What I'm trying to say here is there's a deleveraging going on in cryptocurrency. People are getting roasted. Bitcoin's down 30% from highs, and they got to find places to fill in the holes when they get forced to liquidate their cryptocurrency holdings. They got losses there. They got to fill them in. And I think they're going to the rosy, robust equity markets to find some of it. And that's sort of the key takeaway that I've seen in the past few weeks.
I think it's one of the most logical explanations whenever we look at it like this. And people might forget that whenever you have this deleveraging, right, where brokers are calling and saying, hey, you got to get out, you got to liquidate, it really has this cascading effect. And people are just selling assets across the board. That's why equities are under pressure. There hasn't been anything that's changed. There's no narrative, right? AI continues to be front and center in the build out. Earnings continue to work.
Yeah, earnings. I'm just going to interject. 81% of the S&P 500 beat earnings. 77% beat sales. We have the best earnings in a long time. So, yeah.
Yep. And what I wanted to do here now as we kind of get closer to the end of this is discuss how do you know whenever the coast is clear, right? How do you know whenever the markets are likely done selling off? And we got this wonderful, you were showing the big money index earlier. This is our equity flows. And I just want people to realize that you see the S&P 500, it's down 4% year to date, but there are a lot of stocks that are hurting. I mean, tons of stocks that are down double digits in a bear market. And that's what you can see here in this equity area right here. A lot of those red bars, hundreds and hundreds of stocks are suffering. They're just getting sold. It's been the largest outflows since the tariff crash. Now, a lot of people, they see outflows, they think it's negative, but really big outflows ultimately is the bottom usually. Typically, people sell out at the lows, right? Because of this whole margin deleveraging. So you want to look for big sell-offs for this to help us find where the lows are. And this is another exhibit showing that mega cap tech, this is what's different about this pullback is you've got a lot of mega cap tech that is down in correction territory. And I own most of these stocks, and so do you, Jason. But Meta down 26%. This is from their intraday peak. Netflix down 18%. Tesla down 17%. I own all of those. The list goes on and on. What is unique about these is they're liquid. And when they're liquid and you have a deleveraging event, people go to the fastest way to turn their assets into cash. These are going to be those places that people are hunting for.
Wait, don't move on from that chart yet. I think what a key point, and you're so right? But it's right in the title of the chart. Not only are they liquid, they were all at highs. So people are looking, where are you going to take your profits? These monster mega cap stocks that have just gone up so far and everybody's excited about AI and blah, blah, blah. It's not really the narrative. Like that's what the news is saying. Hey, we're going to run out of power and how are we going to pay for all this AI? And there's overspending. And I don't think that's it. I think people got to scramble and find some cash. It's a dash for cash.
Totally. And these are wonderful companies. When you get this caliber of companies on sale, right? These are opportunities. It's not a time to be saying, how low can they go? It's a time to be saying, when do I want to start buying some more?
Yeah.
We had a couple of studies in here. This is part of our big money insights piece that comes out each week. And I think to help kind of drive this home, we're in this deleveraging event, right? A lot of stocks are down, a lot of portfolios are down. But the good news is we tend to see the ultimate bottom whenever we call these forced capitulation triggers. So FCT, you're like, what the heck is that? Well, that is when we get 400 or more stocks that are sold in a day. And I've boxed those here. These are these big red bars. This would be the tariff capitulation that we saw back in April. You can go all the way back to the really big one that we had in the COVID lows. And then we've had a few of these, but typically what happens is you get this exhaustion. Everybody gives up, then the markets seem to rally on no news. We're getting very close to that if we're not already there. So I do want there to be some positivity in today's message that there is a lot of damage under the surface. We are starting to see big outflows in some of the biggest leading stocks in the market, mega cap tech. These are all pointing to we're getting closer to the lows. You got the low BMI. History says you do want to start adding stocks as we get close to that 40% level. As we wrap up, Jason, what areas are you really leaning into or thinking about as the market kind of tries to find its way as we get into year end?
Yeah. Just before we move on, I think just for those uninitiated, when you said the FCTs that we get to a level of 400 cells or more, when we say cells, we're talking about outflows. And what does that mean? An outflow signal is something that we came up with that says, hey, there is an unusual amount of money flowing out of a stock, pushing it down to a certain range. That's kind of like an alarm bell saying someone's getting out. It's not just stocks being sold in the market. It's stocks being unusually unloaded. And we find a lot of historical ties to that and correlations. So I just want to make that distinction. In terms of where I see opportunity, semiconductors is probably the number one space. I'm looking in tech, and I'm looking specifically at semis. I know it's risen a lot in the past few years, but if you look back to 2022 and we had that lost year of tech, what was the fastest sector to recover was semiconductors. And let's be honest, people, there are chips in everything, in your washing machine, obviously in your phone. There are 2,000 chips in every average car rolling off the assembly line. There's chips in my refrigerator. Chips. We're not going back to just, simple cars that still work in Cuba 50 years later with an engine and, a ventilation system. Everything is tech. Everything's driven. AI isn't going anywhere. We're using tools right now that's probably transcribing this. So I'm really interested in looking at semiconductors that have a strong history of growing sales, growing earnings on 1 and 3 year basis, high profit margins, and manageable debt. You and I have owned one of these stocks for a long time, Lam Research. It's probably one, if not the biggest winner in our portfolio. There are a bunch of great companies out there, KLAC. And you can even look at the big ones too, right? Like NVIDIA, I still think is a great own. I still think AMD is a great own. So I'm excited about tech and semiconductors.
Yeah, I'm going to echo that sentiment. It continues to be a place where when people go risk on, right? And I'm not talking about some of the quantum and all of that silly high flyer stuff. We're talking about real companies tied to real themes that are changing our lives every day. And also you've got the highest level. The White House is in on this, right? So you really want to be focused there. I would also say what made it interesting is semiconductors has been one of the areas in correction. Like I was saying earlier, S&P's down 4%. Tech was down 8%. Semiconductors were down 12% at one point last week during the big sell-off. Where do you think those big money managers are going to be deploying assets? You better believe it's going to be in the biggest theme right now over the next few years, and that's going to be AI. And that's also what we're seeing in our data. With that, Jason, I really enjoyed this chat. I can't wait to bring more and more insights, possibly bring in some guests to talk about data that they're seeing. But this was really good. I really enjoyed it. And yeah, we'll have to do this again.
Yeah. If we have questions, comments, put it in the bottom there. We'll try and get to it. We're going to try and make a habit of this. And I like seeing your pretty face there. So there you go.
That's the bonus. All right. You guys have a great one, and we'll see you next time.
Take care. Talk soon.